Welcome back to the Stanford Business Forum series. I hope you have enjoyed the great discussion so far. Such great energy and clever ideas shared about how to fuel the growth in Africa. By the way, my name is Yassine Lerziwi. I'm Moroccan. I'm a Sloan Fellow in the Stanford GSB, and I'm talking to you now from the Bay Area in California. But as you'd guess, my heart is in Africa right now. So we're about to start the Energy and Infrastructure panel, named after our sponsor, Mckinsey and Company. And I'd like to thank our sponsor for the great report that he brought to this forum. Energy and infrastructure aren't only prerequisites to sustainable economic development. They also offer a huge opportunity to transform the continent. So for this panel, believe me, we picked for you the best moderator possible. He is the co-founder and CFO of Aspire Power Solutions, which is a renewable energy company focused on providing clean, affordable electricity in Africa. Prior, he was a director within the Grow Africa team at BCG. He also worked at Africa Finance Corporation, where he focused on energy and infrastructure investments on the continent. He holds an MBA with honors from Harvard Business School and a Master in Science in Electrical Engineering from the University of Michigan. One fun fact about him, when he was growing up, his moves on the soccer field earned him the nickname of JJ. I'm sure that most of you know who is JJ. So for those who don't, JJ is a very famous former international Nigerian footballer. Please, Tomiwa Igun, join me on the main stage. Hi, Tomiwa.
Hey. Thank you very much, Yassine. I'm still not sure where you got that fact from, but it was true. But I'm glad I'm here and not on the soccer field today. So
yeah, so we are very happy to have you today. And please, the floor is yours.
Thank you very much, Yassine. Welcome everyone. Thanks for the intro and the setup there. We have a really exciting lineup. If you're here for the energy and infrastructure panel, then you're at the right place. We'll be talking about the economic infrastructure that's required to drive growth. And you have a wonderful all-star cast of panelists that will be going through and walking us through a bunch of different interesting concepts, thoughts, and talking through some of the opportunities and challenges that we face in the infrastructure space in Africa and how energy plays a role in that space as well. Quick intros. I think Yassine already gave an intro of myself. Born in Nigeria, very passionate about electricity. That's why I studied electrical engineering for both my undergrad and my master's. And even at HBS, wrote a case study on the privatization of the power sector in Africa, and much of my career has kind of spent the power sector. Our company, Aspire Power Solutions, is primarily in Nigeria today, with goals and hopes of expanding beyond Nigeria and across the continent. And we basically support or remove the barriers to sustainable, affordable, and clean electricity access across the continent. I talked about the all-star cast. We have Sadia Sawi Benani, who is also Moroccan. She's the president and CEO of Valiance Consultant and has had a wonderful and illustrious career, starting off at Valiance as a junior consultant and then now rising to the position of president. And she was also appointed a member of the Special Commission on the Development Model by the King of Mohammed VI of Morocco. So welcome, Sadia. We have Shola Lawson, who is Managing Director and Co-Head of the Africa Infrastructure Investment Managers, AIM, coming in with over 17 years of corporate finance and infrastructure equity investment experience across both Europe and African markets. And AIM is one of Africa's largest infrastructure investment managers. They have over $2 billion under management, and they have done work pretty much across the continent. Shola's responsibilities range from originating, executing, and really pushing infrastructure, power, renewables, midstream technology, transportation projects. Some of his past experiences come from Macquarie, and he holds a BSc in economics from the University College of London. Welcome, Shola. Justin DeAngelis is a partner at Denham Capital. He's one that heads their sustainable infrastructure team. And similarly is responsible for origination and analysis and structuring and valuation of investments, as well as fundraising for their sustainable infrastructure team. Alongside that, he serves on the board of directors of Endeavor Energy, Cyber Energy, Greenleaf Power, and subsidiaries of Rio Energy as well, and is on the advisory committee of Thermos Energy. Just tons of wealth of experience, on the advisory council within NASP, USAID, and even before then, had energy experience as a director at Waypoint and Pace Global Energy. And then we have Raza. Welcome, Justin. And last but not least is Raza Hasnani, who's the managing director and head of infrastructure investments at Africa 50. And Raza has over 25 years of private equity, infrastructure, and impact investment experience across Africa, Asia, and the Americas. He currently leads infrastructure investments at Africa 50 and is focused on making private equity and growth investments into core and soft infrastructure. Led tons of projects and finance transactions around the world during his time at ExxonMobil in Dallas and in Houston. I'm actually currently taking this session from Houston, so my home there. And he's invested in renewable energy, conventional projects, both electric and gas, pipelines, ports, terminals, just lots of infrastructure experience with an MBA from Wharton. So I think as you can tell, just a really diverse and well-experienced cast. So without further ado, welcome to all of you. We will jump into some of the questions I have lined up, and then I'll leave some time in the end as well. Take some already submitted audience questions, and then we can kind of take some more as they come. Welcome, everyone. So maybe I'll start off with this. And I think there's the subtext in the panel description on the website. I think we all understand the issues around just the infrastructure deficit gap. It goes beyond energy and its infrastructure broadly. We can talk about the need, in terms of just estimates by the World Bank that suggests we need, over $1 trillion over the next decade. We can talk about what's being spent, which is minuscule compared to that. And if you think about that $1 trillion, you need on an annual basis about 170 billion in investments, and we're not even close. So tons of challenges, and I think those are some of the things that we'll be tackling here today. So I'll start with this question, and I would say, so when we think about energy and infrastructure, is it actually realistic for us to discuss or address Africa as a whole? And I think maybe I'll tee that up with Raza to start us off, and then yeah.
Thanks, Tomiwa. I would say, generally speaking, one cannot think about Africa as a whole when we talk about energy and infrastructure. Africa, as you know, is a very, very large place. And there are countries at different stages of the trajectory on the continent. So what works in Kenya does not necessarily work in South Africa. The issues that are there in Senegal are not the issues that are there in Ghana. Some countries are hydrocarbons producers, others are importers, some have issues, others don't. Generally speaking, I think that's not the case. However, there are certain things that are common and actually are common with other emerging markets. As they say, history does not repeat, but it rhymes. And Africa, and many countries in Africa are at a stage in their life cycle of infrastructure, which is common to other countries a few years before. So one can learn from the experiences of other countries. And the key things that I think are common are, price signaling is very important to the extent where in infrastructure projects across Africa, the price signal is wrong when people are investing at lower than the correct cost of capital. That allocates capital to the incorrect projects. So those are some of the things I think about when I think about Africa as a whole. So I'll pass it on to you.
Thanks, Raza. I think it's really helpful for us to level set, just understanding that context of Africa as a whole. It's very diverse, as you mentioned, different countries in different stages. Shala, I guess based on your experience, just along those lines, are there any nuances that you want to share, just in terms of, again, how you've, or even as AIM, how you all look at Africa and the differences between different regions?
Thanks for that, Tomiwa. First thing I'd point out is I agree with what Raza has said, which is Africa is very much a heterogeneous opportunity set. It's 54 countries. And you really need to look at it as a local game. From our perspective, we think boots on the ground is the best approach to this opportunity set. And we have offices in South Africa, Nigeria, Kenya, and Ivory Coast. In terms of the markets, are very different. If I take South Africa, for example, you have a properly functioning PPP unit, which has run an exceptional program from a renewables perspective, have raised significant capital internationally. We've been very active there, have built a portfolio of over 2 gigawatts across wind and solar. And we're able to do this because it was a program which was very well structured, which allowed market pricing over several rounds to settle at the levels they are today without enforcing a price that the market should clear at. And that's been a very good example of a program which has worked. If I take another market such as Nigeria, you've got a very different set of circumstances. You've had one IPP which has closed in the last 20 years. And in this market, we were part of the Azura project, co-developing, co-financing, and co-constructing, ultimately exited. And we've pivoted from large-scale grid IPPs because of issues that you see not just in Nigeria, but in several countries in Africa from a grid perspective, to distributed energy. So, exactly as you're doing with Aspire, we're doing with a platform called Starsight, have grown it into a very large off-grid player in West Africa today. And the thesis there really is the country is still starved of electricity, but the bottlenecks in the value chain and the procurement process are not going to allow large-scale projects to keep coming on with the kind of frequency that you need. So how do you attack, the issue directly? You do this by undercutting diesel generation. There's over 20 gigawatts of diesel generation in the market today. And if you can undercut that with prices of 20 to 30% discounts based on, where panel prices have gone in the last 10 years, where battery prices have gone, then you've really got a good business. And we've seen that, Starsight has been growing at over 100% CAGR since we invested 3 years ago. And that very much is the future in this market. But again, different in other markets. You need to really understand the local context in determining how you play.
Excellent. Thanks, Chola. Again, I think that's very important, for setup. Maybe another just a level set the audience question I would direct to you, Sadia. The panel is tying energy and infrastructure. And so from your perspective, how does the energy investment deficit, how does that impact infrastructure more broadly? Yeah, and you're on mute, Sadia.
Do you hear me now? It's okay.
Perfect.
Thank you for this question. I think that there is a kind of circular link between infrastructure and energy. On the one hand, infrastructure, be it economic or social, requires energy. It's obvious. So it fosters energy infrastructure investments. On the other hand, the development of competitive energy projects requires strong infrastructures. For example, port infrastructures, storage area, etc. So both need to evolve at the same time, in fact. More specifically, just as data point that can be eye-opening, on the economic front, it is important to note that the average effective cost of electricity for manufacturing firms in Africa is 3 times higher than industrial rates in Europe or USA. This alone prevents local companies from being competitive abroad and obviously refrains international companies from investing in the country. You can imagine that it is more difficult to develop industrial infrastructure in this context, for example.
Thank you so much, Sadia. Justin, I don't know if you have anything to add to that question, just in terms of the tie-in between energy and infrastructure more broadly.
Sure, thank you. So first, I want to apologize. We've been doing Zooms for a year, and I forgot that my type of shirt looks like a retro disco or something. I was watching it, so apologize to anybody who's who's been like, knocked off their seat. But in all seriousness, energy in the context of, I think, what we're talking about as far as power generation and infrastructure, I think gets more to maybe a subtext, which is economic growth. So if you study anywhere's, the need to invest in infrastructure and energy, that has to happen, as Sadia was talking about, to really fuel economic growth of any significance. There's a constraint right now. If you don't have power, how can you do a whole host of things? Ports you talked about, but also just general economic commerce. So the investment in it is absolutely positively critical. What Shoal is doing with distributed generation makes a whole heck of a lot of sense, because as you talked about at the top, Tomiwa, the continent is significantly short investment in infrastructure. And Shola talked about the one IPP, or maybe there was two in Nigeria, and you can go to other countries outside of South Africa and get the same facts. So what that means is that you have this constraint. So capital or focus has to be given to generation and infrastructure to really try to get some of that economic growth. And man, it's every country is materially different, and every region within a country is materially different. And this is a Africa panel, so I think most people get that, but I'd say 80% of the people that I talk to see it heterogeneous, amorphous kind of one region, and it's totally not. Totally agree with that.
Thank you so much, Justin. So I think I'm going to throw this next question to you, Raza. So, I think we talked about the deficits. I think the unfortunate thing for us is the need actually continues to grow. So we have this huge deficit, and over time, it just keeps expanding. So from your perspective, and, Africa 50, you interact with different governments across the continent. What tangible steps do you think some of the governments, the DFIs, some of the people that have a lot more policy or political clout, can they start to help push so we can start to see an actual significant dent in some of these deficits? Because that's what some institutions like yours are out to solve, right?
Sure. Yeah. So there are several forums. In fact, there are many forums in which cooperation and collaboration is going on. It's those forums are at the governmental level. So you have places like the African Union. You have various other organizations, international organizations, where at the meetings, basically these things are being discussed. I think the approach should be figuring out who can best handle what aspect of the problem. So the private sector is very good at doing things efficiently. The private sector is very good at having a high sense of urgency. But the private sector often feels quite naked when they are going into a region which they are not comfortable with. And you hear this oftentimes when you are in the investment committee of a fund which is not based in Africa. There is something they call, quote unquote, Africa risk. Africa risk is, I have no idea how to price this, so let me call this Africa risk, right? But whereas when we are looking at a deal, it's Ghana, and we can understand, okay, this is what's happening with the SEDI, or there's people on the ground, as Shola said, and that makes a huge difference. The way Africa 50 has tried to do it is, what we've realized is there is actually we feel that there is no shortage of capital for investing in Africa. It's not like folks don't want to invest here. Folks actually want to invest here. You go to a conference like Africa Energy Forum, everybody has drunk the Kool-Aid. Everybody's talking about how much they want to invest. But what's happening is that very few deals get done. And that's because there's not enough projects being properly prepared. So Africa 50, for example, is a purpose-built organization. We are a hybrid. We're a cross between a private equity firm and a DFI. So as a DFI, we have a project development capability where it's almost like venture capital investments. We go early stage, put small dollars at risk. Lots of work goes into it and tries to make projects out of nothing, or basically develop projects. But then we also have a very large balance sheet. We have about $800 million, and we use that to invest not only in the projects that our development team has invested, but also working with other developers. I think there's many different approaches to this. There's many different solutions, but the key point is to make sure that there is some sort of stability. If folks have a sense of what's going to happen tomorrow, that makes things a lot easier for private investors.
Great. And maybe I'll tee this up to you, Justin, because I think Raza, thank you for that. I think Raza talked about some of the collaboration that takes place within the infrastructure and energy space. I mean, in all honesty, and the work, the important and difficult work that they are trying to do at Africa 50, that we were trying to do at AFC, that AIM. I mean, and so, I look back at my time at AFC, which was 9 years ago, and they also had a decent balance sheet.
Sure.
But yet we are not seeing the kind of progress that we need to, at least on the big infrastructure scale. So just from your perspective, purely private sector, what thoughts do you have in terms of what we could be doing to actually improve that deficit?
Yeah. So I do agree with what Raza was saying with respect to there's capital available to invest if there are projects to invest in. So what we've tried to do is create, like with our capital and teams, create those projects. But even at that, still we would do more if we could. And what I think the issue is really stakeholder agreements on what's going to move forward. And what I mean by that is every government knows that there's a shortfall in infrastructure. They need investments in infrastructure, since we're talking about infrastructure or power. But what we're not talking about is that there's and maybe the rest of this conference, there's investment that's needed in education and healthcare. And oh, by the way, the balance sheets of many of the countries have to make tough choices about where to allocate the balance sheet. In a power project, the private sector helps because we put the capital in and we build project and we get a power purchase agreement for it if all works well on the utility scale side. But that's just a financing vehicle for the government. They're just delaying the payment over time in the form of a power purchase agreement. So they're mobilized, even though the cash isn't going out, they're utilizing their balance sheet. So I think that there really needs to be, certainly at the country level, there's tough decisions that need to be made, but there needs to be more planning over the medium horizon so that the commitments can be made to firmly or semi-firmly mobilize the balance sheet of the country for certain pieces of infrastructure. So what that does is provide some level of guidance, security, et cetera, to companies that we own, that Raza may own, that Shola may own, that Saudi may own, that will see that there's an opportunity. Because what we're doing right now as a private investor is I can give my opinion on how to solve the problems in a lot of different places. I can give you what I think should happen. I don't know if that's the right answer, but as an investor, I'm moving around and assessing, okay, is this country, is this region ready to invest, ready to move forward? And Shola talked about South Africa. That program didn't start off so great, and we built the first projects there, but it's a great example of what can be done when there's and it hasn't been perfect even over time, when there's guidance as to what they're going to do, how they're going to do it, and then for the most part do it. And that has crowded in international investors and developers all over, and now they see the benefit of it.
Yeah, no, you make a really good point. I mean, and I think, actually maybe I'll kind of pivot a little bit, because if you ask me why I went into, thinking about building something like Aspire, it really is because of the challenges I actually saw at AFC, where they were putting in a lot of effort, but again, it's kind of on a limited basis. And then these projects take 10 years, and we need speed, right? And you don't have enough bankable projects. So Shola, I think I would just kind of take it to our line of well, at least on the power renewable space. If you look at some of the challenges that Raza and Justin have addressed, what role do you see decentralized solutions playing in terms of trying to fill the infrastructure deficit from an energy perspective? But I think there's a nuance there in terms of the financing as well, right? So again, these big projects you're hoping to deploy $500 million or $350, but with the more decentralized solutions, it's more special. So yeah, can you just share your thoughts on that?
In terms of what I see as the biggest challenges or problems?
Oh no, more like how do you see decentralized solutions helping to fill that deficit? Right.
So it's a good question, and it's a theme that is not just happening in Africa, right? It's a global theme at the moment, which is how is energy being consumed, and the models are moving from centralized grids to much closer to the consumer. Now in Africa, the applicability is going to be high because you've got the effective choice between extending the grid. If we talk about rural customers for a second, and almost 2/3 of the people in the world who don't have electricity are in rural areas in Africa. The connection cost for extending the grid into these type of regions far exceeds the cost of deploying a solar home system. So 600 million people in Africa without electricity today. The future has to be that a lot of those individuals are going to be connected through some form of distributed system. Now, whether it's the solar home systems models that exist today, or whether it's some form of mini grids or something else, we shall see. But there is absolutely no doubt that the best way of harnessing the most plentiful resource that we have in Africa, which is sunlight, will be in those type of models. Now, it hasn't been easy. And look, we found creating scale to be quite difficult. We built over close to 50 megawatts we now have installed at Starside, but it's taken 3.5-4 years. We expect the next 50 megawatts to come a lot more quickly as we settled on the type of model that we need to deploy. But you're still introducing novel solutions. You're asking corporates to put their balance sheet at risk for a period of 10 years, and there is a school of thought which thinks this could be a pure commodity play, right? So you have corporates playing off other providers against each other because how difficult really is it to put a bunch of panels on a roof. So which is why we've taken a slightly different approach, which is, okay, what other value-added services can you bring in which helps with the overall energy efficiency play? And in our case, we've gone to cooling. So most of our installations are panels, batteries, but also energy efficient cooling. And that gives a little bit of stickiness in the type of service that you offer, and it also helps drive down energy consumption, which obviously helps with the substitution away from diesel fuel. So there's a bunch of things that you have to think about. It's not easy to scale, but it will be the solution. And the big missing piece is the cost of storage. And as the cost of batteries come down to the point where you effectively have parity with diesel generation, then that's going to be a complete game changer, right? Because then there's nothing stopping a fully fledged rollout.
Can I comment on that?
Absolutely, Justin, go ahead.
All right, great. So the only thing I would counter to Shola's point is that storage stores the electricity from generation. So if you're consuming, you have to over invest effectively in solar PV, just to be clear, because you still need to utilize the electrons that are generated from the PV during the day. So you have to over invest to store. The other thing that just to be like, we are all for sustainable investments, and we have solar and wind projects invested all over the world, but there's technical challenges if we're talking about large scale solutions. And maybe I'm going to get shot for saying this, but solar or storage of long duration is extremely expensive today. 1 hour storage, coupled with solar is actually very inexpensive, much cheaper than a diesel generator or even a gas peaker today, but it doesn't provide longer duration generation. And I think that as we're talking about infrastructure, big bold letters, we need to break down what are we solving with that infrastructure. So if Scholl is talking about commercial industrial scale solutions or off-grid solutions, that's residential solutions is one thing. Commercial industrial is smaller scale commercial industrial is one thing. Then you have larger scale consumption. So my thesis, I'm not advocating personally for one or the other. It just the shortfall is so large. There's investment opportunities all over in every piece of generation or transmission infrastructure.
I think it's a really good
100%. Yeah, sorry. Can I just add a quick point because I do agree with that 100%. I mean, it's I just mentioned the 50 megawatts in 3.5 years. That's not even a drop in the ocean. The issue is,
but it is just to contextualize, Shola, real quick. Like maybe for Nigeria, it's not, but for many countries, 50 megawatts, because I'm not sure everyone listening in can contextualize 50 megawatts, is actually a significant amount of generation if you're talking about Guinea or Sierra Leone. Nigeria is obviously pretty big. Sorry, I just wanted to.
No, that's right. But the one challenge with respect, we've just talked about the paucity of large scale generation projects in many countries outside of maybe South Africa, Egypt, Kenya, Morocco, etc. Is on the distribution side. Getting tariffs right to get cash flow through the value chain. And it's a political problem, but it's not one that's specific to Africa. It's global in nature. Governments typically want to subsidize the cost of consuming power, but they don't really want to pay for it on time in terms of the subsidy. So that creates issues across the whole value chain, which is why I think there's a particular angle around just leapfrogging that. People use quite a lazy analogy in terms of leapfrogging fixed line to mobile phones. And I agree that analogy can be lazy, but it does have some comparison to the situation that we're now talking.
Totally.
Yeah, no, I think that's a really good point. I think maybe one thing I would add is also, to Justin's point, I know at Aspire Power, for example, we do use an optimization model approach where the model is trying to figure out how much battery do you need to be able to save you money, right? Or what size battery, or do you even need a battery at all? So I think there are also all kinds of innovations that I hope we'll continue to see to really leverage the fact that some of these renewable asset prices are coming down. And we also have the grids and and in most cases existing generators that you could also use as part of the hybridization at times. So I think it's really, really good, rich discussion. I'm going to go over to Sadia just to, I think now we're kind of in talking about renewables. And I think one important thing, and we're seeing this again globally, is just the impact or the effect of some of these global energy policies. And I'm speaking specifically about climate change. And so how do you see climate change and say decarbonization regulation and policy affecting investment, again, within the energy sector? We've talked about renewables, but even more broadly. And then again, how does that translate as we think about infrastructure more broadly?
Thank you for this question. Before answering this question, it is key to keep in mind that many African countries are very much aware of the climate issues, and that for decades now, for some of them. And that for a reason, the reason is that they are the first ones to suffer from their impacts. For example, Morocco launched a proactive energy strategy in 2009, in which renewable energy was to reach 52% of the energy mix by 2020. And we are today setting even higher targets. In line with this ambitious strategy, we developed one of the biggest solar complex of the world near Ouarzadat. It's a city in Morocco. On the other hand, decarbonization policies will accelerate the move. The introduction of the carbon tax by the European Union, for example, will increase the needs of renewable energy with a significant impact on the size of investments in this sector. For Morocco, those investments would help the diversification of the energy mix. Another effect will be to put our countries on the radar screen for companies that need to relocate their industries in green countries. This, for example, is a major building block of Morocco's current strategy.
Tommy, if I could jump in on this one?
Absolutely, Raz. I was going to call on you, actually.
Thank you. Yeah, no, this is something that's near and dear to my heart. I think it's important for Africa to have a strong voice in these policies. Look, decarbonization is extremely important. This is climate change is real. It's a real concern, but it should be driven by the requirements and the situation of African countries. There is a lot of places in Africa where people are burning wood as a fuel. Okay, and there's a lot of places where they're running, if you look at Bauchi State in Nigeria, for example, you have folks paying 60, 70 cents a kilowatt hour or more, running inefficient diesel-fired generators, saying to them, no, you only need to have renewable energy is very, very unfair. So sometimes what happens is the compulsions are not the compulsions of Africa. They are basically mandates being put in by foreign investors. Africa 50 as an organization which is completely African, which is owned by Africans, we're not dogmatic about it. Absolutely. If we can have solar power, we'll absolutely have solar power. If we can have hydropower, we will. But we also know that the grid cannot be stable with just that. And it's very important for us to educate. There's a lot of people out there. There's probably some people in this conference who think, there's a lot of sunshine in Africa. Why don't these gents and ladies just put a lot of solar out there? It's not workable. You need to have a workable grid. You need to have baseload power. You need to have peakers. And it should be driven by the compulsions of the countries themselves, not overseas donors and not overseas investors. That's very important, I think. And Africa needs to have a voice in all these decarbonization initiatives.
Hey, Raz, I'm going to stick because that's something that, again, we experience just when talking to investors. I think maybe some of them are impact driven, but a lot of them really want to go into the rural access efforts, which I think is a big problem. But there's also a lot of money, money that's already going towards that. And as Shola knows, there's also a lot of inefficiencies in the cities, in the urban areas where people are burning diesel generators for 10, 12, 16 hours a day. So I guess, how do you think that narrative could shift from some of these DFIs who see this as a kind of like all cards are on the table, and let's, kind of pick and choose based on the need or the context? What do you think needs to happen for the conversations to go beyond grid, rural, to really start financing projects that are more, kind of peri-urban and urban as well?
Yeah, I think there's so many organizations looking to invest in Africa that this diversity of kind of approaches is leading to some very good solutions, right? So you have DFIs, although they may have their own mandates that have been put down. The investors are generally they want to do good. They actually want to do the right thing for the continent. So they are looking to provide the best solution at the cheapest price. Now, whether that is, and so are private investors. So whether it is solar home systems, whether it's off-grid, whether it is large-scale generation, whether it's generation in island mode, can't have a one-size-fits-all approach. And the fact that there's organizations like AIM, there's Denim, Africa 50, and many others. Some of us will fail in some of the things we do. Some of us will succeed. And I think that is the right approach. And we'll get to potentially a lot of progress this way.
Thanks for that. I want to take a question here that's kind of going away from power and speaking a little bit more around connectivity. So does any limit to widespread consumer connectivity reduce the viability of online or entertainment business growth in Africa? If so, do you see that limitation changing? So I think the question is more around, like how does the level of connectivity, how does that impact online business growth? And what kind of, if there is a restriction, how do you guys see that change? I'm just going to throw that out, so I don't know who would want to take that.
I'm happy to take it, Toma.
Sure, Charlotte, go ahead.
Okay. I mean, look, the digitization is one of our three key themes that we invest around. And if you look at the underlying fundamentals, data per mobile subscriber over the next 5 years is growing at 8-fold in Africa versus 4.5 times in the world. So, I mean, obviously from a very low level, but as people get a smartphone, the first thing somebody wants to do is take a picture, and they want to send that picture. And then they want to go onto YouTube and watch some football clips, and then go onto Facebook to share that. So that's creating a tremendous amount of data just from the consumer side. But you're also seeing trends on the corporate side. Companies are migrating to the cloud. All these trends being accelerated by COVID. A lot of governments are implementing, data sovereignty requirements, particularly around the telecommunications sectors and the banks, which is creating need for storage and data centers. So there is again, from a low base compared to globally, but the trajectory over the next 5 to 10 years is very high. And to be able to satisfy that, you need to invest across 3 sub-verticals, essentially. Telecommunications towers, businesses, fiber assets, both backbone and also last mile, and then also obviously data centers, which house a lot of the data storage requirements. So the answer is, if we don't invest in the backbone, you will, this migration from the real world to online, which is happening globally, Africa will be left behind. And that really is one. Technology will be one of the great levelers for this continent. If you look in the next 10, 15 years, if people have the tools, you're able to build value in a way that you weren't able to do 20 years ago in Africa. So it's a massive requirement, and to us almost as important as the electricity problem.
Can I ask Shola a question?
Sure.
Shola, yeah, what do you think on this digitization point? You're talking about serving the continent, but what do you think about different parts of the continent not just serving itself, but becoming a hub to serve others? So data centers, not just for Africans, but the whole world's interconnected. Is there an opportunity there? Assuming you have reliable infrastructure and interconnection to the rest of the globe, but you have a young, growingly educated workforce. You have a lot of capital that wants to plow in. Could that be almost a leapfrog potentially, or is that too? Am I being too opportune?
Yeah, I think if you're talking about data storage, say in Africa for European markets, for example, I don't see that. I mean, the trends are that consumers are demanding lower latency applications, right? You go on Netflix and you don't want to wait 5 seconds. You don't want your movie to be buffering every 5 seconds. And to have that, you need the storage, closer to the consumer. So what's been happening historically is that you've had data being stored offshore in Europe, and then submarine cables bringing that connectivity, but then you still have latency and speed issues. And the way to solve that is by bringing all of that stuff onshore.
Cool. Yeah.
I don't see Africa. Yeah, I don't see the trends moving in such a way as to support that. But I do see the trends moving in such a way as to support investment in telecommunications towers.
Yeah.
In more, fiber to the home, in more data center capacity, etc.
Gotcha. Yeah, and I was thinking like maybe even hyperscale computing, so you don't need instantaneous delivery, or cryptocurrency mining where you don't need instantaneous delivery, like maybe things that you don't need super low latency, but you do need connectivity.
Yeah, Shola, I feel like it ties back to what you were saying about what needs to happen, right? We need to make investments in these things. And if the service then gets good enough, then eventually I think those urgent, low latency things will come on board. Yeah, that was a good question. I'm going to take another one. I'm trying to figure out how to position. Anyway, actually, I'll just, so Sadia, if we, we've been talking a lot, kind of, we started off just grid, renewables. We've talked about some of the policy things. If we look at how we want to bridge the gap, just from your perspective, like what opportunities do you see around collaborations between different countries that help jointly solve these problems and maybe even create better opportunities for capital to be deployed? And you're on mute, Sadia.
Yes, thank you for this question. There is many potential collaboration between African countries. I will just give you one. Even with good modeling of forecasted electricity demand, it can fluctuate according to cyclical peaks and troughs in load. It is therefore important to have a regional electricity market that can absorb or compensate for those variation. One way to secure energy investment is therefore to create a regional energy market. In this market, the overproduction of one country meets the unsatisfied demand of another, and energy investment become more profitable. No clipping, all production is valued. It's one of the opportunities we can talk about.
Makes sense. Thank you so much, Sadia. And I don't know if anyone has experiences with some of the pools, like or at least some of the efforts that have also happened, across the different regions in Africa. But if you have any anecdotes or thoughts, I don't know, Raza or Shola or Justin, that you want to share, please feel free to chime in.
Yeah, not the pools, but I'd like to talk about, what I think is a huge opportunity is the African Continental Free Trade Area. Okay, I really think this is something that's going to be a game changer. Many of the continent's development challenges, from electricity to transport, require cross-border solutions, and this would be an excellent framework for implementing them. The transition phases of the African Continental Free Trade Area could alone generate welfare gains of over $16 billion and boost intra-African trade by a third. And post-COVID, we really need that boost. The treaty includes a series of protocols that should make the continent more competitive and attractive to investors. These include rules on dispute settlement, investments, intellectual property, movement of people, and the elimination of non-tariff barriers. So every step we take towards the implementation will have immediate benefits.
That makes sense. Actually, Shola, I'm going to take this question. It's a renewable kind of focus question, but the question goes, it's certainly true that solar panel arrays plus battery energy storage costs are competitive on a life cycle basis, but the upfront costs are prohibitive to most. How are you navigating financing and making these solutions available to those who need it most?
Yeah, no, thanks for that. So on the corporate side, as I talked about earlier, you're effectively pricing at a discount to their total day one energy cost. So if a company is spending, 100 Naira per month on electricity, you go in and you tie them up at 70 Naira. And that model sort of works. And, they not just on the panel and battery on storage side, but also, as I mentioned, on the cooling side, you can reduce electricity consumption by up to 40%, we found, in some commercial businesses where all you're doing is putting in more efficient cooling that senses the ambient temperature, that switches off for the very simple things that in the West, people have been doing for years, but nobody thinks about being efficient over electricity use in our markets. So that helps also reduce or fray some of the long-term costs for some of the other components over a period of time. So the one other thing that nobody has talked about, but I think which is essential, and Justin, your experiences in LATAM and in Asia, many of these markets and South Africa, many of these markets have deep pools of local currency financing, which can go out long term, and where you remove an element of currency risk from the tariffs. And outside of South Africa, we don't have that on this continent. If you look at the size of pension pools, South Africa, you've got $180 billion plus in local pension funds. The next biggest market is Nigeria with about $30 billion. So you look at the penetration rates, the economies are roughly the same size. The pool of savings, local savings that exist in many of our markets need to be bolstered. And in the case of Nigeria, you've seen growth at over 20% a year because of specific policies that have been put in place to target that. But the next step becomes, how do we use those pools of savings to finance long-term projects? And if you take out currency risk from many of these projects, then you start taking away one of the material hesitations that governments have in respect of long-term procurement.
I think that's a great point you bring up, Shola. And I don't know if that was Justin. I was trying to get Razat to actually touch on that, since you all finance. And I would say, I think AIM obviously is deep pocketed, so they can kind of throw a lot of money at Starsight. But when I think about like companies like Aspire, we do, there are those challenges of fundraising where most of these funds are available in USD and your business is in Naira. And then even at the grid scale level, right? Similar concerns from a project development perspective. So what are you guys at Africa 50 or some of your peers doing to really help bridge that FX risk and enable more investments in both the large and the small, or in the small or medium?
Yeah, it's a real issue. Africa 50 has a dollar balance sheet. Our investors have invested in dollars in us. So, we invest in dollars, and that is, I guess, the main risk, if I really think about it, is the foreign exchange risk. That is probably a good portion of the investment risk that we talk about, the things that the unknowns, so to speak. There is an effort going on to get local currency financing. So, for example, if local currency debt is available, that makes the project obviously a lot more attractive. To the extent local currency equity is available, that would just make things a lot more attractive. And one of the key themes that Africa 50 has is to try to reduce the hurdles that local pension funds, local institutional investors face in investing in local projects. So we think of ourselves as a catalyst, whether it is from a point of view of helping folks underwrite the deals, acting as an honest broker. But the challenge absolutely remains until we have a significant amount of local currency funding available for projects. That's something that's going to lead to sometimes very erratic performance on investments.
Thanks, Raza. Justin, you were going to say something. I think that was your voice. So,
two things on this, and kind of related to one of the other topics, is one of the ways that we, if we're building a project and it's a dollar contract, country's taking currency risk on that deal. So, we're not taking explicit currency risk if I'm getting paid in dollars, but I'm taking implicit currency risk because most countries aren't dollarized. So one of the ways that we try to mitigate that risk is just to be a low-cost power provider. So focusing on the lowest, most sustainable cost is critically important. This kind of is an FX point, but also to the point on, or the question on battery storage. One of the concerns I have for for any investment is its sustainability. It's you have environmental sustainability, but economic sustainability. And if you look at all the South African projects were done, or the Azura project, any project that gets done, the day it gets done, everybody's saying it was too expensive. And and then you get all this pressure, and you're trying to deal with people like, look, I'm not, it's what it is. I'm not trying to get one over on you. But with the storage, large scale storage. So Shoal is, doing a smaller scale, but large scale storage. Like if you said, hey, build a 50 megawatt, 100 megawatt solar or wind project and put a bunch of battery storage around it, and that's going to be helpful. That you have to look at the economics around that in the first instance, but in the second, do you really want to make that investment right now? Because in 3 years, I'll bet $1 million that it's going to be half of the price it is today, given where investment is going. So I'm making this comment because it gets back to a couple different things. Like the solution to power problems on the continent are not going to be rooted in my opinion, are not going to be rooted in solar and battery storage today. That said, because of cost and technical considerations and all the other things. That said, just to be clear, I fully support some level of investment in these areas, but just be careful. There's no silver bullet in any of this anywhere, and particularly on the continent.
It's a fair point. I wouldn't take the time to disagree with you just because I play in this space. But I think it's a fair point. Again, we need, I think, as Raza alluded to, we need all hands on deck. I think there's just a huge need and a huge gap. And in my opinion, some of the bigger projects also just take way too long to actually produce. So I strongly believe there's a good bridge there, because at least in Nigeria, most people are just running diesel generators.
100%. I totally agree. Totally agree. But I'm making that comment, frankly, for a lot of the listeners, just to try to help. The answer is complex. It's not one or the other. It's actually a little bit of everything, and that kind of contextualizes Raza's comments on gas-fired generation. And Shoal is. So it's just be careful. What you hear on the headlines, because the solution is a fair bit more complex.
And look, I think just to pick up quickly on that, for just make it really quick. We're running. Oh, sorry, are we at the end? I was just going to say we're big supporters of gas in situations where it's replacing higher carbon and higher cost fuel elements. It makes absolute sense, and it's going to be part of the baseload solution to this concept going forward.
Right.
Was that quick enough?
Yeah, that was good. So maybe just parting words. You have a bunch of MBAs. You have a bunch of people from all over the world. Some of them are trying to figure out where in the space they could play. Sometimes it's a little technical. They might not understand all of it. So, 2 questions and you could pick one. But if you want, share maybe about where you see opportunities and kind of like where is your next investment or advisory in the case of Sadia. Or what advice do you have for people like me who might be just coming out of business school or just thinking about getting into the renewable energy space and and wanting to understand what are some of those opportunities and what should they be concerned about?
I guess I can go first. I'll take the MBA question. I think it's important to do one's research. Just figure out which particular market wants to play in, which particular subsector one wants to play in. Also make sure that you understand if there's any market distortions, because particularly when you have things like solar, where a lot of folks with a very, very low cost of capital are investing, it might be difficult to make for entrepreneurs to make a commercial return. But I think the key thing I say to everyone who is finishing an MBA and wants to go work in a place like Africa, or actually in any other emerging markets, is the key thing is once you go there, it's very difficult to go back to developed markets, because the amount of stimulation, the amount of fun, the amount of learning you have in a market like Africa or in any of the emerging markets cannot be matched by, for example, what I was doing before in Dallas or Houston. So be careful if you go into this then it's very difficult to go back and do something less interesting.
Thanks. Sadia, anything quick?
Very quickly. First, my message is when there is a will, there is a way. So go for it. The energy sector is a sector of the future and will pay out. Africa benefits from real assets given our climate characteristics, wind, sun, and whatever. Now, it is important to consider that all the countries are not at the same level in terms of regulatory frameworks. So this needs to be studied cautiously before investing in this continent. Very quickly.
Great, thank you. Justin, you have the last word. It has to be short, and then I need to hand over to Yassine before you.
Hard for me to be short, sorry. So I'd say do your research, don't read the headlines, just do all of your research, set realistic expectations of what you're going to do, have conviction, be prepared to be frustrated, but don't give up.
So well, this has been an exciting and very insightful conversation, but you know, every good thing must come to an end, and a big thank you once again to our panelists, our moderator, and everyone who joined us from all over the world. Thank you to the Stanford Africa Business Club for organizing this, also for Mckinsey & Company for powering this panel, and for all our sponsors for supporting this great event.